Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on yesterday's video. Hopefully it gave you a bit more information as to what is going on in the general markets, as well as what I am continuing to do, which is average into those positions and take better prices on the projects I believe in going into the future. That being said, I also want to say thank you. We've just surpassed 2,000 subscribers on this YouTube channel. No change from me. Obviously, we're just going to continue driving forward that content. I will continue driving forward that content for you guys anyway. Right, let's jump into this video as there's some more news. I wanted to cover Luna again in a bit more detail and the wider repercussions of what's actually happening, as a lot of eyes from big corporations and governments are taking aim at what's happened with Luna and UST, and it may prove to be a definitive nail in the coffin for regulatory policy against crypto. That being said, if we look at the crypto bubbles chart for the last 24-hour period, we can obviously see that Luna is obviously down still 90%, and UST there nearly 50% away from its peg. So obviously UST being at roughly 50 cents, which is horrific considering it was meant to be a stable coin, and the UST to Luna mechanism has completely broken down, hence why that price has fallen. Not only that, obviously, I reiterate from yesterday's video, there are tons of buying opportunities in this market right now. Immediately on this screen, some of these will probably jump out to you straight away as projects I've spoken about on the channel before. Engine down 16.5% on the daily, 65% down on the year, fantastic opportunity there. Chainlink at sub $10 is ridiculous, 81% down on the year, something that I'm going to continue to build my position in. Quant as well, the same. HBAR, of course, I'm continuing to buy. Rune here has just jumped out at me, 80% down on the year, 21% fallen on the day. Now, bear in mind, we may continue to see an exaggerated sell-off continue to play out across these markets. Averaging into these positions will allow you to take advantage of those monumental rises back to the upside. As I said before, if you're trying to time these markets, you're going to get painfully bitten as they move. If you sell out of the markets entirely and you're trying to time the bottom, chances are you'll miss it, and you'll miss that 15, 20, 30% pump back to the upside, which is fairly inevitable in the crypto space. We see this happen regularly. We'll see a 15% drop over a couple of days, and then suddenly over the span of 6 hours, the prices will rocket 18%. If you're averaging in on a consistent basis, you will be able to take advantage of those compared to the people that decide to completely sell out of their positions. Something to bear in mind, of course, you need to have that conviction for the long term. Enough said on that, because I've covered it a lot. Now, the equities markets is something I just wanted to touch on recently. I've mentioned them quite a few times in many videos, and they're still important to the crypto space because there is significant positive correlation between US equities and the cryptocurrency markets. Effectively, what that means is if the equities markets are doing well and they're going up, big tech stocks like Apple, for example, and Google continue to trend towards the upside, we tend to see crypto do fairly well. In the same light, if they're doing poorly, crypto does poorly. Now, a macro factor obviously driving a lot of this is inflation. This is denoted by the consumer price index. And today, as I mentioned in yesterday's video, we've just received the latest figures out of the United States for April. The expectation was a year-over-year inflation rate, April to April, of 8.1%. However, it did come in slightly higher than that at 8.3%. However, more importantly, it was still down from March's figure of 8.5%. Now, this may be showing key investors and institutions that inflation actually peaked in March and is now starting to come back down from those highs of 8.5%. Obviously, time will tell. We will see the reported May inflation figure next month. And as long as we see a consistent decline, the equities markets and crypto space may begin to return to normal, and the fears of recession may continue to fade, as well as signify that the Fed did just about catch it in time to prevent a recession. Obviously, that will still draw out. And like I said, showing you here, this is the S&P 500 across the board, and we can see the equities markets are starting to look slightly more green than they have done previously. And this is obviously translated now across into the fear and greed index for cryptocurrencies. We can see that yesterday was a complete extreme fear of 10, and with 2 points above that now, an extreme fear of 12. So there is a little bit, a tiny sort of speck of relief showing back to crypto space with a little bit of equity flowing back into the markets. Now, of course, that being said, majority of projects are down massively. A key one to watch is, of course, Bitcoin. It's the main driver of these crypto markets. And in particular, that $30,000 level is of real important significance in terms of resistance levels. Here on TradingView, obviously, you can see this day-by-day price action chart, and that was a key piece of resistance around that 30,000 level. If we fall through that $30,000 level on Bitcoin, there is a high possibility the bottom of this market will completely fall out, and we'll continue to see massive moves towards the downside, particularly as liquidations are very rife at the moment due to over-leveraged traders in the long position. That being said, we also could see a small relief rally as shorts get crushed as part of a micro short squeeze. So what I'm basically saying is the volatility to the upside or downside at the moment is still incredibly uncertain. I'd be very careful about averaging into any of these positions that you're not confident in holding for the long term. That being said, as I restate, I'm averaging into positions that I believe in for the long term. Some of them I'm down significantly on now from where I was investing previously. So there is almost no downside to me to buying at this price. If you're trying to enter the market, be careful of a dead cat bounce. Flicking over to something somewhat positive, the Queen over here in the UK announced in her new bill that she is aiming to effectively support the safe adoption of crypto in the United Kingdom, as well as more easily seize and recover crypto-related losses to ransomware. So this is fairly bullish for the UK in general for crypto adoption. And obviously we're seeing as well signs of Rishi and his team gear up for a CBDC announcement potentially over the coming months, maybe even years. Talking about that as well, Bitcoin dominance is something I just wanted to quickly point out. Obviously, as these markets fall, or pretty much are in free fall, Bitcoin dominance is showing relative signs of strength again. The first major pump we'll now see will be against the Bitcoin rather than, say, tokens like Ethereum or the rest of the altcoins within the space. We'll see a lot of investors flock to this as a sort of stable alternative to blue chip projects, something to bear in mind. Now, recovering the USD or UST, and TERRA Luna news. Obviously, we can see here that the UST price has failed to regain that peg of $1. We're currently at 0.46. So 46 cents on the dollar for something that was meant to be a stable coin. Obviously, this has drawn a lot of attention over in the United States. I know Janet Yellen has already said that they're compiling an investigatory report about this token because of the dangers that it poses to retail investors. Obviously, they'll cite that it's a safety concern for financial well-being of people. That being said, we can see TERRA Luna as well is somewhere around the $3 mark. Actually, earlier today, around 2 p.m., it did go as low as 81 cents roughly. So this actually may be a slight dead cat bounce sort of towards the upside, and this will probably continue to fall. I think absolutely all of the support for TERRA Luna and its ecosystem is now completely burnt. In reality, this may end up being one of the biggest losses we've ever seen, or biggest drawdowns we've ever seen in a cryptocurrency project over a short period of time. I personally, after being in crypto for sort of 6 years, have never seen something with a market cap of what TERRA had, top 10 crypto project, lose this much value over literally a span of 72 hours. It is unbelievable. Also shows the signs of making sure that you're investing into projects that are sustainable for the long term. So one of the key concerns people had around TERRA Luna, and there are some other projects like it, are they were heavily backed by VC or venture capital, and they were effectively pumped by venture capital, and they were less concerned about the future of their project and more about short-term gains. And a lot of you probably could see that from 𝗟𝗘𝗙𝗘𝗥𝗥's Twitter account, where he realistically has been completely humbled by this experience because he genuinely believed he was a god amongst men whilst the token and his project was effectively increasing in value. And now this has happened. There's not much he can really do other than sit back and pray that the UST regains its peg. I'm steering really well clear of Luna, especially for the near term. Potentially, if the dust begins to settle and we do see token prices in the dollar range, I may pick up some as a complete gamble towards the upside. if you think it's at $1 and it may somehow retake that $100 mark. It's 100x upside effectively potential for the token. How likely is that? Personally, in my opinion, not very likely, but we'll see how it plays out. As I mentioned, here is the article from CNBC that controversial stablecoin UST, which is meant to be pegged to the dollar, plummets below 40 cents. They've covered it, and many other members of the financial committees have covered it as well. I just wanted to cover this Twitter thread by 𝗏𝗏𝗡𝗦. It's his latest update from 4 hours ago, and a funny meme here. This is what I meant, tweeting out stuff like, by my hand, day or die will die. And then obviously he's now been buried underneath his previous comments. If any of you do hold Luna, this is probably well worth you guys reading. He seems to believe that they will regain the peg over time, and it's going to be a long and arduous process. However, it should happen. Now, something to be said as well is TERRA obviously had a ton of Bitcoin. We could see a small supply shock hit Bitcoin again, which could drive the price down even further if they begin to liquidate those Bitcoin reserves in order to protect or retain the peg. So I'm just going to start sort of somewhere down here. Before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There is no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. First, we will endorse the community proposal 1164 to increase base pool from 50 million to 100 million SDR, decrease pool recovery block from 36 to 18. This will increase the minting capacity from 293 million to 1.2 billion. This should allow the system to absorb the UST more quickly. So effectively, they're going to play around with those algorithmic metrics, which have caught them in hot water, to hopefully absorb that UST that wants to leave in order to regain the peg. They've also said more ideas will be discussed in the community forums at 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦. With the current on-chain spread, peg pressure, and UST burn rate, the overall supply overhang of UST, i.e. bad debt, should continue to decrease until parity is reached and spread begins to heal. Naturally, this is at a high cost to UST and Luna holders, but we will continue to explore various options to bring in more exogenous capital to the ecosystem and reduce supply overhang on UST. As we begin to rebuild UST, we will adjust its mechanisms to be collateralized, i.e. going back to what it should have been in the first place, rather than being algorithmic, i.e. based on some functions between the different tokens to generate that value. They will actually be backing it by US dollars. Whether or not this will be enough to sort of regain the confidence in UST, particularly when there are other stable coin pegs like USDC, I don't know. Seems fairly unlikely in my opinion. Once you have an incident like this, it leaves an incredibly bad taste in the investor's mouth. The TERRA ecosystem is one of the most vibrant in the crypto industry, with hundreds of passionate teams building category-defining applications within. As long as these builders, TFL among them, continue to build, we will come out of this together. TERRA's focus has always been oriented itself around a long-time term horizon. And another setback this May, similar to last year, will not deter the lunatics. Short-term stumbles do not define what you can accomplish. Interesting that they deem themselves lunatics. Literally, the definition of a lunatic is someone that's completely insane. Maybe you are insane to be investing or believe in the future of TERRA. Who knows? That being said, moving away from the TERRA Luna news, I just want to cover something about HBAR. I've seen a few people tweet and also comments on my videos saying that NFTs do not load inside their HASHPACK wallet. Turns out it's actually a hash access issue, and it's to do with their IPFS node responses. So if you do have any NFTs that have been purchased via hash access and they fail to load within your wallet, you do still own those NFTs. It's just a node issue which they are looking to fix. And this was actually after some investigatory work by the HASHPACK team. That's just how good they are as a team in general. They're constantly driving forward to make sure that everything works in the ecosystem and is the best it possibly can be. Wanted to round off as well, just talking about Coinbase. Coinbase earnings were incredibly bad. Worse still, the crypto exchange is now warning that bankruptcy could wipe out user funds. So hidden away in Coinbase's global disappointing first quarter earnings report, in which the US's largest cryptocurrency exchange reported a quarterly loss of $430 million and roughly a 20% drop in monthly users. An update on the risks of using Coinbase's service that may come out as a surprise to millions of its users. So they've effectively said that there's potential that if they do reach insolvency, that users' funds could not be guaranteed. Now, obviously, this goes back to that traditional saying of not your keys, not your crypto. Off the back of this, I'd probably urge anyone that does hold cryptocurrency assets on Coinbase, you should probably look to migrate some of those assets onto on-chain wallets. So for example, if you hold HBAR on Coinbase, set yourself up a HASHPACK wallet and transfer those HBARs to your HASHPACK wallets. Obviously, that is then governed by you. It's a non-custodial wallet. You have the keys. It's your crypto, and you're not at risk of a platform going bankrupt and taking all of your crypto with it. This has been a real risk in crypto ever since its inception, and something to always bear in mind when using centralized exchanges. If you don't believe or there is ropey news about the centralized exchange, it's always worth just migrating your crypto assets to either cold storage or a hot wallet. Anyway, guys, that kind of wraps up this video. Like I said, not much change from yesterday in terms of market outlook. I'm just going to continue to average into those positions. I've been buying a ton of HBAR at these prices as I am still ever bullish on the ecosystem, and we are seeing launches of products this May. So in the next couple of weeks, there'll be more videos from me touching on those DEXs, DAOs, and other products launching to help build that DeFi ecosystem. That being said, if you like this video, drop a like, leave a comment if you've got something to say. I do enjoy engaging with all of you. Make sure you're subscribed, and I'll catch you in the next one. Cheers.